Cheap oil prices spurring demand overseas. China reporting this morning its highest import levels of the year, taking in the equivalent of 7.8 million barrels a day. Joining us now for a look at where oil prices are headed, price futures analyst Phil Flynn is here from the CME. Hey, good morning, Phil.
Good morning. Good morning. That China number was pretty incredible. I mean, that's almost every barrel of oil that the U.S. produces, China is importing on a daily basis. I hope they're buying it all from us, Sandra.
Yeah, exactly. So what is this going to do to the price of oil? We're looking at just over $46 a barrel this morning. Actually a decent move to kick off this morning. It's up nearly 2%. Where do you see oil prices going from here?
You know, I think they could go a lot higher. I mean, one of the bearish arguments we've heard from people is that China demand was going to slow. That really hasn't happened in a significant way. And when you look at China's oil production numbers, they're actually falling. You know, they've been a victim, really, of the low oil prices as well. And they're importing oil because it's cheaper for China to import oil than it is to produce it. You know, but the other thing that oil traders are talking about is that massive crude oil drawdown. According to the American Petroleum Institute, we saw crude supplies fall by 12 million barrels. If that's confirmed, that's going to be the biggest weekly drawdown since 1985. Wow. Now, the reason is pretty obvious. The hurricane that we saw in the Gulf of Mexico shut down Gulf production. It slowed imports, but still a massive number the traders are going to have to get their arms around.
All right. And sheer economics, you know, when the price comes down, demand tends to go up, and we are seeing that cheap oil prices has led to an increase in car travel. Here in the U.S., drivers hit a record 3 trillion miles the past 12 months, Phil. Oil analysts are concerned that a lack of new jobs and manufacturing demands will slow the oil rally that we have seen recently. Are we seeing a peak in oil prices for 2016, Phil?
No, I just think we're getting started. You know, I think that's really been negative. You know, when you talk about the build in gasoline supplies, throughout history, that always happens at the bottom of the oil cycle. You know, prices get cheap, they build up supplies, and it's at the high. So I think that's a bad argument for a bearish case. I think it looks very bullish because demand's going to exceed expectations. We're going to see energy investment drop pretty dramatically next year. So we're not looking for any new barrels of oil. And I believe that OPEC and non-OPEC are going to do a deal to freeze production. I think the odds are very high that's going to happen. When you get the world's two biggest oil producers working together to support prices, you can almost bet the prices will stay strong.
Hey, Phil, it's Mike Murphy. You know, you heard that announcement on Monday that they were talking about controlling prices or possibly cutting back, and it didn't do much to the market. As our markets were closed, you had a spike and it sold off. You hear a lot, Phil, that OPEC has lost its teeth, that it's no longer in control, that we create our own oil here. But I believe the other side of that. I believe that if OPEC does look to stabilize prices or increase prices, you're going to see the price of oil get above 50 and possibly run to 60. Do you agree?
I agree with you absolutely, and I think the market doesn't respect OPEC because what happened in Doha, they had a deal and it fell apart, and they think that this deal is going to fall apart. But you cannot underestimate the power of, you know, Russia and Saudi Arabia, the world's two biggest oil producers, working together with the rest of the OPEC cartel. They're gaining control of this market, and if they decide to restrain production, we will see prices go a lot higher.
All right. Not even 5:30 in the morning there in Chicago, and you're up bright and early for us. Hey, Phil Flynn, thank you.
Thank you, dear.
All right. Still to come.